Ladies and gentlemen, welcome to another edition of the Independent Speculator interviews. With us today is Robert Giustra of Allegiant Gold. Allegiant Gold is something well known to readers of my past work. It was a spin out from Columbus Gold, and it also has the legendary Andy Wallace at the co-helm, if you were. Robert's with us today to tell us about where the company's at now, and then we'll go into Q&A. So Robert, tell us about Allegiant, what you're up to, and we'll go from there.
Sure, Louis, thanks. Allegiant is newly listed. We were listed in January, so we've only been trading about 9 months. We have a great share structure, about 60 million shares outstanding, tightly held. 60% of our holders are institutional. We have what we believe is one of the most prospective exploration portfolios in Nevada, identified by Andy Wallace, who has been recognized by industry as perhaps having one of the best track records of actually finding gold mines in Nevada. I think we have one of the strongest boards in the junior mining industry. Russell Ball last year was the CFO of Goldcorp. Prior to that, he was the CFO of Newmont, and that's opened a lot of doors for us. Norm Pitcher was a past president of Eldorado. We have a flagship property called Eastside with about 1.5 million ounces and growing, open in every direction with tons of upside. And we're also excited about what we call our discovery drilling program. We're drilling 6 projects over a period of about 11 months. We've just drilled one, or we've just moved the drill to a second property called Hughes Canyon.
Okay, well that's a good overview. It's really interesting that you start by really focusing on the people. I think of the interviews that I've done, most of the CEOs have dived right into the property, their flagship property, the hot property. But Doug Casey taught me, drilled it in, and absolutely consistent with my own way of thinking. The people was the first P, right, of the 9 Ps of resource stock evaluation, the Casey formula. And the wrong people can screw up the best rocks in the world. So I appreciate that overview. And of course, I've met Andy and I've been in the field with him, and he's a great guy, highly respected. True story about the track record. So that said, let's talk about the model a little bit. Allegiant spun out of Columbus. Columbus was meant to be a prospect generator, but then it got a flagship in French Guiana, and then there's Eastside. So it ended up pretty much focusing and doing its own exploration. Allegiant now has a flagship in hand, but it has a whole bunch of properties in Nevada. You have a partnership with Goldcorp. Can you tell us about the strategy? Are you trying to do the prospect generator model except for Eastside, or are you really planning to do most of your own exploration, or what should investors look forward to from Allegiant on that score?
Well, we're moving both programs forward in parallel, essentially. Eastside is the flagship. I mean, there's no doubt. There's 1.5 million ounces, and it's getting larger. But our principal strength is our experience over 40 years in Nevada of our exploration team and their track record. So we're leveraging that experience to actually prospect, something a lot of people in Nevada just don't do anymore. The reason our exploration team has such a substantial track record of success in Nevada is because they prospect and they drill. So if you ask Andy Wallace why they've been so successful is because they drill. They drill as many projects as they can. And as you know, Louis, it really is a numbers game. You drill enough high quality targets, identified and delineated by individuals that know what to look for, and eventually it'll pay off in a discovery. It isn't written anywhere that you can only have one flagship property or one project you're working on. We would happily.
The one's good. One good one is good.
Yeah.
Sorry, let me jump in there for a second, because this is actually new to me. I hadn't really cottoned on to this, but I mean, I know you had a whole bunch of properties from the get-go that Andy and at the time John liked a lot from Cordex days. And then that, some got tested, some more got brought in. Some have been with you for a while, and they got spun into Allegiant. And I was sort of thinking that you were pretty much going to give a whack at these properties that had been wanting for exploration for so long. But you're telling me you're out there prospecting still, which means you're picking up new properties. So you're actively going to test Andy's favorites, but you're also bringing new projects into the fold?
Absolutely. You have to keep churning. You've got to test a lot of quality targets in order to make a discovery of something that could be potentially economic, as you know. But you make a very good point, Louis. Yes, we have this portfolio. Some of these projects we've been sitting on for some time. We're constantly adding properties, and I think that could be confusing to some of your subscribers or some investors. The fact is, we're churning, and we're adding high quality assets constantly, and we're testing them, and that's how we create value for our shareholders. You mentioned that we were formed in Columbus Gold originally as a Nevada prospector. It's absolutely correct. In 2008, we decided that it was getting very difficult around that time after the financial crisis to continue to fund early stage exploration. We wanted to continue leveraging Andy's experience and expertise, so we kept our exploration team in Nevada moving forward. But we had a 5 million ounce deposit in French Guiana that we acquired, and that really became the focus of the company. If you've got a large deposit and a bunch of early stage stuff in different jurisdictions, in what essentially has been a really tough decade for mining in the last 10 years, I think we've had 2 good years of the last 10, you have to focus. There's limited capital available, you have to focus. We decided to focus our drilling money in French Guiana, but we always kept prospecting, and we always kept adding to the portfolio, delineating targets, and fine-tuning. At one period, we had close to 40 projects, and we had about 20 of those farmed out. And over the last several years, since 2012, we've been just whittling down the projects to the best of the best and advancing them to the drill stage. So all 14 of our projects are drill ready. More than half are permitted and bonded for drilling, but all of them have fully delineated targets. They don't need geochem, with the exception of one property. We're carrying out some more geophysics. They're ready to drill. And they've been identified by one of the most successful geologists in Nevada. And, Nevada's where you want to be for the gold business.
Sure. So what's the variable there? I noticed that in the presentation it says 6 to 10 properties to be drilled this year. Why 6 to 10? Why not 6 or 10?
We're presently funded from Goldcorp. You mentioned earlier Goldcorp made an investment in us. Goldcorp is specifically interested in 4 to 6 properties in the portfolio that they like to see drilled. We're going to aim to drill more. So there's the 6 that are going to get drilled under the Goldcorp arrangement, and potentially up to another 4 that will be drilled, not over 12 months, but if we're going to drill all 10 of them, it'll probably take more like 3 or 4 months longer. These are all small programs. They're 8 to 10 RC holes. They're first pass programs. It's shallow, inexpensive drilling. And frankly, the objective is to keep whittling down the portfolio. You don't drill 6 of these and expect to make 6 discoveries. You drill 6 and expect to make 1 substantial discovery. So I would expect if we drill 6, 4 will get dropped. I'd expect something pretty substantial to come from 1, maybe a second property where you have to go back and drill a couple more holes to make a decision.
And if that happens, Goldcorp gets a ROFR on the ones that they're funding?
Yeah, Goldcorp has some rights. Their rights are principally third-party rights. So if we were to enter into an agreement with a third party, they have the right to match. So they don't have the right to come in and swoop in and take the property or take the project. They just have the right to match third-party offers on any of the projects that they're funding.
That's a pretty good deal for you. And the other one, suppose you found something great. Another Eastside looks like it's shaping up in one of the 4 that's just yours. Would you then be able to step up to the plate and actively work on 2 big busy projects, or would you then prefer to take that result and go to some other partner and say, hey, look what we've got, wouldn't you like to have 60% of this?
Look, I think we're going to just have to take it as it comes. So we're drilling, and we're going to get results, and then we'll decide what to do next. We have optionality. I think most importantly, we're funded to drill all 10 if we want to. So the program to drill the 6 principal properties are about $2.5 million. We have about $5 million in the bank. Okay,
very good. I was going to ask about that, but might as well get it under. So
you're well funded. I preempted you.
Those are my questions. Those are the ones Rick taught me. What's the program going to cost, and how much do you have in the bank? So we have that out of the way.
Very Yeah. Essentially, it's 250 to 400,000 Canadian per property, depending on whether it needs how much road building it needs, or how hard it is to push through the roads and build the trail paths and so on.
Sure. And can you tell us, is Bolo one of the ones that Goldcorp wants to poke at, or is that even on the list to be drilled this year, or where are we at with Bolo?
Bolo is not on the list to be drilled this year. There is a third party that's expressed an interest in Bolo, and we're considering it. We do consider it one of our best properties. But my experience in farming properties out Louis, we've done a lot of farm outs in the last decade. You almost always get them back. So we're seriously considering a farm out of Bolo at this time, and you'll just have to stay tuned.
I remember it was one of Andy's favorites, so I was wondering, and why isn't it getting poked this year? Is it a permitting thing, or waiting on somebody else?
Well, we drilled it last year. Mm-hmm. And we would like to test the other properties.
Okay.
I mean, the other properties have not seen any drilling.
Okay. All right. Fair enough. Fair enough. All right. Well, let's focus on Eastside for a moment, because that's obviously the flagship. It's the underpinning asset right now, at least in the market's mind. You've got a resource there. I look at the cross sections, and it looks to me like an anticline. And you've got, if you look at the map looking down, there's sort of two kind of concentrations, if not actual zones. But then you look at the cross section, it seems like you're drilling the two down limbs of an anticline. I'm not sure if that's right or not, but it kind of looks that way. But if it's sloping down away from each other, that's sort of pyramid shaped, and that's the opposite of the shape you want in an open pit. So can you talk to us about, am I right about that? And if that's the geometry, what does that do to our strip ratio? How much of that might be open pittable? And we have bulk grades here by and large, so we really want to see an open pit deposit, and I'm churning my gears on that geometry.
Right. So as you drill, you learn more about the deposit. And you're right. There appears to be two structures that presently make up the resource, that control the mineralization and make up the resource. They dip to the west. We've encountered what could be a third structure. It's not clear to us at this time whether it's a third structure to the west, because we have drilled to the west, or whether it's part of the second structure. It's going to need more drilling. We just can't answer that question right now. But what we do know is we've completed a resource estimate about a little over a year ago that indicated that there, based on that resource and the parameters used with the $1,300 pit, that there was a rather high strip ratio. And if you look at a plan view of the resource within the pit, you can see that all around the rim of the resource, everything in that pit around that rim is classified as waste because it had no drilling.
I get it. That's a key point, because it had no drilling, not because it's actually been sterilized.
Exactly. So that was the pit that worked. The other challenge with that pit was that it left 500,000 ounces under the pit. So we used MDA out of Reno, Nevada. They're recognized as being very conservative in carrying out resource estimates, but they're very credible. So if they carry out a resource estimate, everybody knows the ounces are actually there. They will only carry out or announce a resource if it's inside a pit. So there's 500,000 ounces under the pit that couldn't make it into the pit because the western part of the pit was undrilled and classified as waste. In order to pick up the 500,000 ounces under the pit, the western wall would have had to been pushed out, and it just wouldn't have worked. The economics wouldn't have worked. So we went back this summer. Earlier in the year, we completed drilling this summer and announced the results. We drilled 20 holes just to demonstrate that the gold actually does continue west, and it does continue south in those areas that are currently classified as waste. As you know, Louis put the press release out a couple of weeks ago. The drilling was successful. It was very widely spaced, but it clearly shows that we're open west and we're open south. We intersect the gold, I think, in pretty much in every single hole. So what we need to do next, because as you pointed out, it does have a high strip. I think it's butting up around 6 to 1. We need to get in there with some denser drilling. MDA and our guys have laid out a plan to drill 66 holes. where MDA has indicated that they can give us a resource estimate after completion of that drilling to completely fill in the western and southern part of that pit, which will have the effect, it'll have several very important effects. It'll allow us to push out the western wall and pick up the 500,000 ounces under the pit. It's also going to add all the extra ounces you identify from the drilling, and it's going to significantly reduce the strip ratio. That's a $3.5 million US program that we're presently contemplating, having some discussions on how we're going to fund it.
Okay. Let me make sure that I've got this clear, and especially for the non-technical folks out there. You have a pit, and on one side it's bordered by what is currently classified as waste. And if you can turn that or part of it into ore, you can move it that way without increasing the strip ratio, and that lets you go deeper. So not only if you're successful, now you already have been successful, but if you're even more successful drilling on the west, that adds ounces there, but it makes the pit deeper, so you get two increases for the same drilling.
Right. So it's not hard to see how you can add significant ounces in the pit with a pretty small program.
Okay, that's quite interesting.
And reduce the strip ratio at the same time.
So we're still thinking about funding for that, but with that work program ahead, is there, let me rephrase. What are the milestones? We want to make a decision, we want to fund that program. How long will that take? And then we get a new resource, and then we go to economics, or what happens?
I'd like to have funding in place to carry that program out early next year. It would be a 9-month drilling program, so a resource estimate about a year from now. A new resource estimate about a year from now, excuse me.
That's very interesting, and I find myself thinking back, as a person who's followed this story for a long time, since back in the Columbus days, and you know, I remember the look on Andy's face when he talked about all these projects he'd wanted to drill for so long, and there just wasn't any money to do it. And now Allegiant is actually doing that. So I'm very excited about that. But the other sort of more cold-blooded half of me would say, well, gee, if you've got money in the bank, why not just focus on Eastside? That's the bird in the hand. Can you address that?
Yeah, I sense you're trying to get a good answer out of me on that. You kind of asked me differently 3 times. Look, we have the people, we have the expertise, we have the capital, and we're in the world's best mining jurisdiction. Why stop at 1? If you can have 2 or 3, why not? What's very interesting about our portfolio is that every project, with the exception of maybe 1, are new prospecting discoveries. Louis, you know, every time there's a new gold cycle, it's the same projects that are just getting recycled. It's that they just keep coming back. If you look at some of the companies out there right now, like Northern Empire, which is taken over, that's Andy Wallace's discovery. Corvus has Andy Wallace properties. West Kirkland, there's so many companies, and there's nothing wrong with this, you know, have projects that have been around for a while and they're just being recycled. What we offer our shareholders is the opportunity to be exposed to discovery of new deposits where we think we could really add value. So we have the expertise, we have the track record, we have the people, we have the backing by Goldcorp. We really check all the boxes. We're looking for something new. Having said that, Eastside is new. That was a prospecting discovery. That started with a 2-gram outcrop in an area that apparently wasn't supposed to host gold because they're 7-million-year-old rhyolites. You know, they're young rocks.
You're being way too polite. That's a great story. It's not just an area that was thought out prospective. It's in an area that all the geologists in Reno drove by on their way to look for gold.
Right. I mean, Andy likes to remind everyone that you can see the alteration on the side of the hills from the Burger King in Tonopah.
Yeah,
you know?
I love that story.
Right. There's not one prospector pit on the property. There's not one drill hole. It was just a random prospecting grab sample. We had it sampled. It was 2 grams, and you know, now it's 1.5 million ounces and growing.
So let that be a lesson to anybody that thinks that Nevada must be picked over and we need to go to Botswana instead. Okay, well, those are good answers to the questions, Robert. Like, just sort of let's nail it down though to deliverables. We're drilling now. How many rigs, and what do you expect the news flow to be like for the rest of this year?
So we have one drill going from property to property, hence why it's 10 to 12 months. I can't say it's going to be exactly 11 or 10 or 12. It's 10 to 12 months. We're drilling the 6 projects. We've just completed drilling at Red Hills. We're presently at Hughes Canyon. The one we're really, really excited about is called North Brown. We have up to 9 grams per ton in outcrop. We have float of 2, 3, 4 grams per ton around outcrop, which is 9 grams, up to 9 grams per ton. In the most perfect geological setting known to host large Carlin deposits in Nevada.
So these are jasperoids sticking out on the surface somewhere?
Pardon me?
Are there jasperoids sticking out on the surface?
I'm not going to, I'm not a geologist, so I'm not going to mislead you by trying to get into the details.
All right, fair enough.
But I believe it's Devil's Gate, and it's just the best geology to host a Carlin deposit.
Well, I'll give you kudos for that. I don't know is a much better answer than BS, BS, BS.
I will tell you what a geo does say, Louis.
Okay.
Andy says he's seen 4 showings like this in his entire career, and 3 of them are major gold mines.
Very good. Okay, so one last question then. Are you going to release drill results by project as they come in, or try to put out a batch of several? I mean, presumably if you get something highly material, you have to put it out, whatever. But absent that, interesting results, you go by project, or what's the plan?
Yeah, we're drilling 8 to 12 hour shallow RC holes in these projects. So we're going to bundle up, all the assays and send them all in at once. We've done that at Red Hills. So when we get the results, we'll put a press release. So yeah, as we get results, we'll put them out.
Okay. All right. Well, thank you very much. I wish you the best of luck, and hopefully we'll get out there again to have a fresh look at the projects, and go for it. And my regards to Andy.
Thanks, Louis. I really enjoyed it. Thank you.